Hello everyone, and welcome to today's webinar titled Your IPO is Coming. Is Your Finance Team Ready? My name is Rihanna Collier. I'm Vice President of the Software and Service Division at SIIA. And I'm delighted to be joined today by Mark Gervase from Intacct and Robert Bankey from Opower. They're going to share their thoughts and experiences on how to get your finance team ready for an important company milestone like an IPO. But before I turn it over to Mark and Robert, just a couple of quick housekeeping reminders for everyone. First, this webinar is being recorded, and we will provide you with the full recording following today's event. Next, all of your phone lines are on mute. We do want to be sure to answer any questions you have, so please go ahead and type your questions into the chat box there on the left of your screen. We'll go ahead and send your questions in at any time during the presentations, and we'll address the questions at the conclusion. If for some reason we don't get to your question, we'll be sure that Mark and Robert get a chance to send you a response via email. Now quickly, I wanted to highlight a number of upcoming SIIA events in our Deciphering series that I think that it may be of interest to some of you. You'll see there on the right that we have upcoming events on data and, on the left, on data and analytics and marketing. But for this group, I wanted to particularly highlight the Deciphering Finance series of events on the left there. You'll see we have 4 events scheduled across the country that are exclusively for CEOs and CFOs to discuss growth strategies. If you would like to attend or get involved in any way in any of these events, please feel free to contact me directly. You'll see my email is there on the screen, and again, you'll get a copy of the presentations with that as well. So without further ado, I do want to turn it over to Mark and Robert for the bulk of today's content. So Mark, I'll hand it over to you.
Thanks, Rihanna. Get introductions done here in a second. I'll just give an additional plug for especially these Deciphering Finance events. I've been to a few of them, and you guys do a great job of bringing in speakers, and it's very valuable to finance leaders to just hear from their peers and talk about some hot topics. So I've always gotten a lot out of it. So to everyone out there listening, these are great events. And they didn't pay me to say that. All right. Hi, good morning, and good afternoon, everyone. I'm Mark Gervase. I'm with Intacct. We are a cloud-based finance and accounting software provider, and what we'd like to talk to you about, make it as much a conversation as we can over the next 55 minutes or so, is really talk about preparing for the IPO and then going beyond that. And like I said, I'll introduce myself here, let Rob introduce himself, and then we'll tell you a little bit more about what we're doing here and why we want to cover this topic. So. I've been with Intacct for over 2 years. I am a former CPA. I spent a number of years at Arthur Andersen back in the day when there was an Arthur Andersen. And I've spent over a decade up in Silicon Valley in a variety of product marketing and technology roles, particularly focused on cloud and mobile applications as well. So. It's a great pleasure to be bringing some of that finance background and cloud and technology background to Intacct and to be able to speak with you all today. Rob, why don't you say hi to our wonderful audience?
Hi, everybody. My name is Rob Bankey. I am the controller here at Opower. I've been here about 4 years, and before that I was an auditor and a consultant. As far as when I started Opower, we were a small company, about 100 people. We do software delivery for public utility companies for the most part, and we grew tremendously and ended up going through our IPO in April of last year, and it's been kind of an incredible experience to see this 100-person company transition to a 600-person company and become a public company on top of it.
Thanks, Rob. Yeah, congratulations on that. Coming up on 1 year as a public company. What we'd like to get out of this time together is I do encourage you to ask questions. as we go along. I want to make this as much of a conversation as possible. But the whole reason we're here is because this is a big topic right now. Going public. The public markets are very interested in software business models and software companies. And frankly, there are a number of good reasons to go public now, and we'll talk about that. But what I hope that you get out of this is a really focused, condensed version of some of the key things that the finance team has to focus on. To many people within a company that's going to go public, it's a great ride. It's very exciting. To the finance team, it can be overwhelming at times, and Rob will talk a little bit about that. That's why I wanted Rob to be part of this webinar. I mean, he's been through it with Opower and is going to share some of his real-world experience. But as I prepared to talk about this topic, and maybe some of you have done some of your research on this as well, there's many different resources out there on getting ready for an IPO. Investment banks and law firms and accounting firms and consulting firms all have some great information out there. Frankly, there's a ton of resources. I think what we're going to get out of this is I'm going to condense it down to 4 keys for you as a finance team, 4 areas where you really need to focus and nail it. And then what I noticed, again, as I was preparing for this and seeing what else was out there, is there's so much on getting ready for the IPO, but that's just one day. That's one event. And you've got to then know how to navigate the world as a public company and the lessons learned from there and how to succeed, how to be ready from day one. So we're going to talk about 4 more keys of life after the IPO. All right? So that being said, why is now the time, right? What are some of the key reasons to go public? And the first one I started to mention, it's access to capital. It's a great source of funding right now. It's relatively inexpensive compared to venture capital or private equity or trying to go through friends and family to raise all the money, and then that gets you liquidity, right? It can be an exit for some of your early investors and backers. It certainly monetizes everyone else's investment in the company, and frankly, then you can use that stock as compensation to attract top talent, align everybody's interests. I mean, being here in San Jose and in Silicon Valley, there's such a battle going on for top talent across sales and engineering and product and even marketing. So certainly liquidity is a good thing. Brand is another thing. Certainly, the tech and financial press loves to cover companies that are going public, and they run up to that and looking at the numbers and the personalities, and it can help really establish your brand and establish trust, especially if you are a B2B vendor or even B2C. People can hear of you and they start to believe in your organization. And then there's acquisitions as well. Similar to the liquidity point, certainly once you have publicly traded stock, you can use that to make additional acquisitions instead of having to do everything in all cash or non-liquid stocks. So, Rob, you and I have talked about Opower's experience in going public and your experience with Opower. Were these some of the discussions that happened internally as you guys were preparing for this? Some of the reasons to decide to pull the trigger and go public?
Absolutely, and I think this actually sums it up very well. Every one of these was something we considered as part of our going public, and the reason we wanted to go public. We had some investors that had been here for a while and were looking to be liquid. We were looking to grow and to access some additional capital, especially with the clients we serve, which are large, typically public companies themselves. They were looking for somebody that they considered a peer rather than a startup sometimes, and we thought it will help us. It has helped us gain access to additional customers, and then obviously as we continue to grow, we look for opportunities elsewhere in the market to expand our offerings and bring together a better company.
Great to hear the confirmation that we've nailed some of the top reasons. So as promised, right? I mean, the whole point here is to really talk about the ways to get ready. We've talked about the reasons to go. There's a few, but then once you've decided to go, how do you get ready? So we're going to spend the first half of our presentation here really covering the keys to getting ready. And like I said, we're going to boil it down to these 4 categories. It's about streamlining your processes, your financial processes. It's building up those internal controls, because people are going to be looking closely at that. It's having the right people in place, and it's having the right systems in place. And then we're going to spend the second half talking about day 2 and beyond. So there's still a great focus on financial reporting and how to improve there. Compliance sort of parallels the internal controls. You can see some left to right parallels here, right? Financial processes, financial reporting, controls on the left, compliance on the right. And then we'll start talking about some of the new things or new areas of focus from being a public company. One is focusing on the forecast, and the other is data visibility. And what I mean by that is you've got to drill down and get very granular into expense management and the bottom line as a public company. So these are the areas we're going to cover. I'm going to pause every once in a while to remind you where we are from a progress standpoint, from a roadmap standpoint, and make sure we're tracking to these 8 points. But this is what I'd like to cover with you all today and explain why each of these is an important focus area for you and your finance teams. So here we are again, the first half. And the reason I'm repeating these first 4 bullet points is, over the years I've learned and I've read, and studies have shown that people need to hear something about 7 times before it really sticks with them. And I may get to this 7 times throughout the presentation, but then I've also learned and read that people are only paying attention about 1/3 of the time. So I figure if I can say these things 21 times, then everyone will hear it. I'm not really going to do that, but my point is, these are so important that if you take nothing away from this, here are the first 4 keys to IPO readiness. Jot them down, take a picture of your screen. We're recording this, and we'll send you slides and the recording. But if you had to sum it up today, this is how to get ready. And so the first part when it comes to streamlined financial processes is the SEC requires you to be very accurate with your filings, and in order to be compliant with all the SEC deadlines and process and procedures, you got to get very efficient with your financial close and with your reporting. And so there are a number of financial processes here that you should really try and focus on, right? Automate as much as you can. For example, consolidations. So if you've got multiple entities, consolidating those just can't be sort of a spreadsheet exercise anymore and one lump adjusting journal entry that kind of brings it all together. You've got to automate that and have the detail behind it. You've definitely got to keep in compliance with all the accounting standards. And the example I put here, revenue recognition, right? That's got a lot of people confused. The changes are coming. There's talk of delaying, the go live date for some of these rules, just to make sure everything's clear. But you want to make sure you're always in compliance. Along with automation, you want to start to eliminate spreadsheets. And we all know and love spreadsheets. I've been using them forever, and I'm sure I'll be using them daily for the rest of my career. But when it comes to critical financial processes, you want to try to eliminate those and automate that and take some of the manual risk or risk of data loss out of it. And then, lastly, you want to have very powerful financial reporting. Right? You want to be able to not only meet the statutory requirements, but your own board and management need as you go into preparing for life as a public company. And that means that your financials need to be built on very well documented, very organized transactions and balances, so you as the finance leaders within your organization can justify and support every position you're taking and have insight into every number that's being reported. So Rob, you and I have talked about this a bit, and you've been through this major milestone. Kind of have some background on how to prepare for an IPO. So, as far as streamlining financial processes at Opower, what are some of the things that you've had to go through?
Sure. Yeah. Thanks, Mark. I would say that this is probably one of the most challenging things we had to do at Opower. As a growing small software company, we want to be nimble and we want to be quick, and that led to kind of a plethora of different ways of doing things. One department would do procurement one way, and another department would do that another way. And I think what we had to do as we were considering the run up to public is kind of making our information consistent and making it giving the same requirements across the company so that we could streamline and standardize our financial information, and we could streamline and standardize our processes so that we're capturing everything. For instance, we took a lot of the company from different procurement and different kind of purchasing methodologies. We put them on a standard system. We then used that standardized system to do a lot of our accrual generation so that we could do that much more quickly than we used to be able to, because we didn't have the visibility into what was going on from a procurement standpoint as a standard across the company. So that's one of the things we did. One of the other things we did is we took our we took and standardized our systems. We upgraded some of our back-end financial accounting systems so that they would just provide the appropriate reporting that we would need consistently and quickly in order to get everything together, just to be able to get that information to the auditors more quickly, and to be able to get that information to even internally our department managers more quickly and more accurately than it had been provided in the past.
Great, Rob. I like your point that this is one of the biggest challenge areas. I mean, it's kind of one bullet on a slide, but ultimately, streamlining financial processes is probably the number one thing you can do to prepare for going public. And speaking of auditors, which you just mentioned, the second thing is having robust internal controls. And so we're talking to growing software companies who are outgrowing a lot of processes and procedures, and sometimes just flying by the seat of their pants to get things done and get ready for the IPO. But unfortunately, once the auditors start coming in, you really need to have those financial controls in place, documented, and followed. Otherwise, all it takes is a couple of bad audits or a couple of real concerns about controls, and that can really slow things down, and they will force you to go back and fix things before they can give you that unqualified opinion. So, we recommend at Intacct you start preparing for things like SOX, full 12 to 24 months before your IPO. So if your CEO is thinking, 18 to 24 months, that'll be our timeline, you need to jump on this today and start working with consultants or your auditors to work on establishing some of these controls. Now, some of the areas of focus in this area is approvals. Rob started talking a little bit about this, but everything you've got to do that involves approvals, whether it's people making purchases or journal entries, who's signing contracts, who's approving expenses. Then there's the workflows themselves. So every company's got a different process they follow for whether it's approvals, and purchasing, and payments, and payroll, and a lot of different financial transactions. And one of the things that you need to be able to do is have a system that works the way your business works and not the other way around. You don't want to have to, 12 months before an IPO, start changing all of your financial processes just to meet the needs of whatever financial system you've put in place. So you want to be able to define within the software what you're doing and not have the software define you. And then lastly, one of the key controls is always leaving an audit trail. little breadcrumbs wherever you go. You want to be able to prove, without a doubt to the auditors that there's no individual who has complete control over all parts of a transaction. And part of that is, proving who has access to the system, what that individual can do once they're in the system, and then who at any point can make edits to the data. So these are some of the key areas, and Rob, you and I have talked about this as well. Going from a small company to a big one, you've got to really start acting like a big company much earlier than you want to sometimes. So can you talk about your experience in going through and putting some of these controls in place?
Sure, absolutely. And you point out 12 to 24 months may seem like a long time, but to be honest, once you kind of kick off the IPO process, it seems like there's never enough time, and that's your least available resource. So the earlier you can start any of this stuff, whether it's system implementations or working with consultants to start understanding your control procedures, the better it is for you. We were very aggressive in our timeline and ultimately hit it, but man, was those 8 months just kind of rigorous and time-consuming and so challenging. And there's always in 2020 hindsight, wow, I should have started that 6 months sooner than I did. And so if you're considering it, and while there's costs associated with it, I really would recommend doing everything you can to kind of pull forward any analysis that you can do or any systems that you can to get them going before you're focusing on writing the S1 and having the quarters reviewed by your auditors. Other kind of side note point related to this, the challenge here, I think, is really that this tends to be a moving target. Our accounting team grew from 5 people to 25 people during the course of both going public and now becoming a public company. And so a lot of what changes and a lot of the focus changes from primarily being segregations of duties issues to really being about documentation and consistency issues. And so there's a shift in the controls that you're focusing on and how you're focusing on those controls during the process. And it's kind of a moving target. And at some points, you just have to pick a cutoff and say, okay, what was it then? What is it going to be? And kind of making sure that you're doing what you need to do to be both compliant and smart as a company on where you're going to focus and what controls you're going to focus on and limiting your risk overall.
Thanks, Rob. I think that was a great point. Is every accounting and finance team will experience growth as they go through this process and beyond. And you're right. You go from do we have enough people to have proper segregation of duties to, well, now we've scaled so much, how do we make sure everybody's following the same process and procedures, or at least being consistent? And that's a nice segue into the next point is you need to start thinking about this again pretty early on. What are the key functions? What are the skills you're going to need to not just prepare for the IPO, you need some real workhorses, but then to sustain your growth and success as a public company. So things you may not have considered or hired for yet are, who is your expert in SEC reporting? Who is your budget and forecast expert? Do you have somebody who's going to handle investor relations? What about Treasury? Rob, this is one of the points you made to me when we spoke about this a while ago is, one of the great benefits of going public is you get all this money. So you got to be able to manage that, and some other skills. You're right. You need to be concerned with legal matters more than before. And some of these you may be able to outsource, but some you may need to hire. And some of the skills that people have on your team may be obsolete. You may need to think about retraining or counseling people to find other roles. You've really got to not only develop processes and procedures and efficiencies, but have the right people in place. One of the areas that I like to talk to prospects about is managing this while you're managing a new system. So when you start to automate and put a new system in place, one of the things that should help you do is free up your time to start looking at the big picture and stop doing manual currency conversions and consolidations and manual everything really. And when you automate, then you can focus on hiring the skills you need in this area, not just focusing on manual work. And another great thing about adding all these staff is that they're capable of doing so many of the things that your 5-person accounting team used to have to worry about. So to automate and scale, you generally add new systems as well, maybe some system that focuses on forecast and planning, or some sort of treasury management system. And so it's important, the last point here, is to manage your integrations as well and have a free flow of data back and forth between all these systems and between all these people, so the data is consistent, single source of truth. I know we've heard that mantra many times, but as Rob said, when you go from 5 to 25 people, everybody's got to be working with the same set of data and using the same or similar processes and documentation procedures as well. So Rob, you talked about this a little bit already, but where are some of the new skills that you've had to gain or hire or outsource? Can you talk a little bit about that growth from 5 to 25 people?
Yeah, sure, absolutely. I mean, I think there are the standard ones here that you think about, which are SEC reporting, which you didn't have to have as much of before. But also there's kind of secondary skills. There's the tax implications, and the tax gets significantly more complicated when you're going public, or you have more money, or you're expanding your international operations more so than you were before. So that needs to be hired. And then there's also just good people with experience related to running larger operations and focused on the process and focused on the efficiency of the process, rather than just doing manual things and adding particular staff. Based on the number of invoices you have, you want those people to be more efficient, and sometimes that's systems, and sometimes that's people, and people knowing how to use those systems. That said, another recommendation here is really to start thinking about this early, because it takes. I was surprised by kind of to a certain extent a similar talent deficit out in the market for qualified people to do these things. SEC reporting, really hard to find a great SEC reporting person. Tax, difficult to find somebody that works well, that isn't just super focused on one particular area. And so in thinking about the run-up of going public and thinking about your needs, my recommendation would be probably double your expectations on the amount of time that it takes to hire somebody, and then also consider how long it takes to get that person up to speed. We found on average it's probably 3 to 4 months before somebody is functioning at capacity. So even if we hire that person and get someone to sit in the chair, we're not operating at efficiency with that individual for another couple months on top of that. And so that just keeps building as we build as a public company and grow as a public company. So the earlier the better.
Thanks, Rob. Good insight there on the setting your expectations for hiring as well. And the last point I want to cover here in the run-up to the IPO is on systems. And it's probably obvious where I stand, working for a vendor who makes cloud accounting and finance systems. But frankly, you need a quality system, and you need one that is built for a growing company. You need one that uses modern technology and modern interfaces. You don't want to bring in a bunch of SEC and tax experts like Rob was talking about and put them in front of 25-year-old technology or some very basic entry-level software that can't handle all the complex needs of a growing company. And then the last point is it's got to be able to integrate. I touched on that already, but you're going to need so many new systems and new processes, new procedures as you get ready to go public, that the ability to easily integrate without having to go in and do massive programming and hire expensive consultants at $500 an hour to go and make sure everything works. It's going to save you hassles and headaches and stress. So definitely get yourself a great system, a world-class system, one that's built for growing companies, especially software companies. And this is perfect timing to remind everyone to ask questions. Use that Q&A window. If you have questions for me or for Rob, I'm happy to take them, and I'll read them online. We got one in a little earlier. Kind of, I guess we didn't directly address this, but the question is, how far in advance of going public should we be live on our future financial system? So we talked about hiring and we talked about controls and compliance, but we didn't really address when to have that new financial system in place. So Rob, can you talk about what you did there with getting on a new financial system and when you did it?
Sure. So we, I think one of the key driving metrics is there are two things. Within the S1, there are two financial breakouts that you need. Those are, there's essentially a 5-year table of the last 5 years of financials on a GAAP basis. And then there's also the previous 8 quarters to the S1 filing that you need. And so ideally, from my perspective, you have all that information in one system, because pulling it from multiple systems and ensuring consistency, even if you've had prior audits, going back and having those quarters re-audited, or if you've changed presentation at all, if you've changed allocations at all, making that information consistent is so much easier if you're doing it on one system as opposed to pulling from 2. We ended up changing our systems, it would have been 3 years before we went public, and part of it was when we went to the new system, we imported a couple back years of data so that we knew that we would have enough consistently presented and pullable, so that we would be able to provide that information. Along the same lines, I would also say that one of the unexpected or slightly unexpected thing was just the cuts of data that we need to make, and that management wants to look at, and that management wants to also provide to investors is slightly different than what it had been in the past. We want to cut our data by product, or we want to cut our data by segment, or cut our data by entity. And if you don't have that in a system that allows that, it leads to a lot of manual work and recreation of something that happened in the past when you may not remember or have the right documentation. So again, the earlier the better, and my recommendation is probably at least your last 8 quarters in that system.
Thanks, Rob. So your example of 3 years is probably a little on the early side. The number of the companies that we deal with, a lot of people come to us, within that 2-year window, thinking I got to make the move now. So kudos to Opower for having the foresight. I'll give another example. A company, a customer of ours, Workiva. They just went public in December, a couple of days before Christmas. They've been around for many years. They're a company that many of you may want to get familiar with. They work with public companies to help with SEC reporting and filing and disclosures, and really getting insights into your data and your systems when it comes to reporting to the SEC and investors. A great company. They went with Intacct from day one when they were forming the business, and it was probably a little bit more than they needed as a small startup in Ames, Iowa, but they had the foresight. They knew that they were going to be big, that they were going to go public, and they wanted to, like Rob talked about, they wanted to have that same system of record, consistent data, consistent reporting from day one. So they went and bought Intacct, and a couple of years later, boom, public company. So thank you to the individual who asked the question. Hopefully we answered it. And what I'd like to do now is transition into the back half, if you will. So you've worked hard for 8 months, 12 months, however long it's been. Finance team is exhausted. Everyone else in the company is elated, and now you're public. And the fact of the matter is that the IPO itself is just another milestone in what should be a very long journey of building a successful company, especially in software. So to manage these new challenges that you face as a public company, you really do need a system, a financial system that's going to support your operational growth and the strategic complexity that comes with being this newly public company. And these are the words and the guidance and the advice from our own customers at Intacct, who are public companies and who have adjusted to this life. So we're going to focus on reporting, compliance, forecast, and data visibility, and talk about what that means when you are a public company. So, again, I've mentioned this. Rob's mentioned this. The IPO is kind of the one day. It's a great event, but you've got to evolve. Once you go public, you're going to use that money for something, and it's often expansion. Whether you're acquiring other companies or whether you're expanding into new territories, whether you're doubling down on product, you've got to improve your financial reporting capabilities. You've got to go faster. You've got to reduce errors. You've got to be prepared for M&A events, whether they're hypothetical or real. And you've got to be able to manage that expansion with tracking new channels, new territories, new locations, new lines of business, and be able to easily add that into your financial system and continue to effectively report, but yet segment. So, Rob, you guys have been public now for a couple of quarters, and how have things changed already? What have you had to do to adapt from a financial reporting perspective?
Yeah, I think this may get to a later point, but it's really there's a lot more involved in the forecast, and there's a lot. I guess maybe a better way to say it is there's just a lot more complexity within the business. The bigger you are, the more complex it seems to be, and now that you have access to this cash to grow and to change, the business wants to take advantage of that and use that, and that for the most part for accountants makes things more complicated because it isn't one product anymore. It's 5 products, and it isn't one or two entities. It's 5 entities, and each of those has their own nuances and complications and special accounting provisions. So really, it's getting that data, and it's getting it in a way that everybody understands it, that's consistent, and then they can take that and use that to build out accurate information and pull that into their forecasts and understand how it's going to impact the business down the road.
Thanks, Rob. Yeah, one of the things I get into discussions with our prospective customers about is, when they come to me and say, yeah, we're a fast-growing software company, we're 18 to 24 months out from IPO. I say, okay, well, start thinking about this today. How are you going to improve your controls? And, what are the causes today of your accounting errors? How can we help you solve those? And, what do you have to do today when you have to add a couple of new GL accounts for a new line of business or a couple of entities? So we go through some of those processes, and it starts the ball rolling, thinking about how you're going to improve over time. And then while you're doing this, there are more eyes than ever on you as a business, right? As a public company, there's much greater scrutiny on your financial reporting than ever before. The SEC, your own auditors are paying closer attention because now you're a public company. You've got Wall Street analysts, you've got all your public investors, and you've got the press. The media is all of a sudden paying closer attention to you than ever before. It used to be, and it is for this way for many of you today. The board asks a question on a Thursday or Friday. They can wait until Monday. That's okay. Let's sort it out, get them the right answer. But now, SEC deadlines are fixed, and you can't miss one. So, compliance is a big deal. Another example I like to share is if you remember reading last year in some of the financial press, the SEC asked Salesforce, the bellwether of cloud, best-in-class companies. They asked Salesforce, hey, Salesforce, can you show us some more details on revenue by product? You've got multiple products now. Can you break that out? And Salesforce, they couldn't do it. And it's because of the challenges in doing this within an existing financial system that might be a little more inflexible than some of the modern systems. And so it's a little bit of a plug for Intacct, but we help companies with situations like this, and help keep you in compliance and keep you out of the headlines for the wrong reasons. So Rob, talk about life with a board versus life with a board plus the adoring public, the change, the before and after when it comes to compliance and all the eyes on you.
Sure. Yeah. No. I mean, there's two things that happen. One is the business gets more complex, and so it takes a longer time for the business to get back to you and report results. So it's not one guy you have to talk to; it's 10 guys, or it's not one product manager or one head of engineering. It's a bunch of them, and they're not only in San Francisco, they're also in Singapore or Argentina, and you're just pulling a lot more information. So your front end gets pushed back. Then the opposite end of that is, okay, now you have these external reporting deadlines that are faster, and your auditor is demanding information so that they have the appropriate time to look at it before they push it out and approve it to the market. So you're getting information later. You have to produce it more quickly so that it can be reviewed more quickly and with more detail than what was either presented to the board or external investors or even management before. I think there's just a smaller time frame where you have to do more stuff, and it can get really challenging.
Yeah, thanks, Rob. Good insight there. And along with this regulatory compliance and some of the things you've touched on already is that focus on the forecast, right? Most public companies, not all, but most do offer guidance on their future results, whether it's 1, 2, 3 quarters ahead. And frankly, you learn pretty quickly, and all of us as investors know that companies that don't meet their guidance really suffer the consequences. And predictable growth is something that is rewarded. If you're a SaaS business like Intacct and like many of the companies out there, Wall Street loves that model. They love recurring revenue. They love subscriptions. But you, as a finance pro, have to be very accurate with your forecasts. And so, you need to have that insight into your business operations, what's working, what's not, and how to model for that, and how to be able to think long term, not just looking at a dashboard, but then knowing what to do once you see something interesting, a new trend, or something maybe troubling in the numbers, even mid-quarter. What can you do to adjust to hit that forecast you promised the street? Rob, what do you do to manage your forecast of predictable growth?
Yeah, I think having the right systems in place to be able to track kind of key metrics and what they are. Sometimes you can tell what your business is doing even before you close the books because you see those key metrics change or look different than they have in the past, and you'll know that'll have an impact a year out or 2 years out, and that helps you update. But it's really about making sure that you're capturing the information you need and that your finance and your FP&A teams need to get the right information and to get it accurate. This kind of goes back to almost pre-IPO stuff too. Is you need to start thinking about this early, and if you have the opportunity to practice this prior to getting in the situation where you're a public company and reporting to the street, just making sure that you're able to do it accurately before it really has a huge impact. The more time you can do and practice and work through that and get accurate, the better.
It's a great point, Rob, and you did mention that before. Started preparing while private for being public. If you are 24 months before an IPO, and you're able to, as a finance team, pull together a 4-quarter forecast, then you can watch how accurate you are with your forecasts and explore the ways in which you are over or under your forecast, and start to fine tune. And practice makes perfect on this. And even if you do it for 10 years, it's always a challenging exercise to do forecasts. But boy, if you can get a couple of quarters worth of practice and then test your forecast to actual results, doing it privately, you'll be much better off by the time the spotlight is on you. So the last point I want to make here on the back half is kind of a vague one, and I think it'll make more sense when we dive into it: data visibility. So, and what I mean by this is it's managing the bottom line, not just the top line. Software companies I speak with, they all tell me the same thing. Our board has one directive for us, and that is to put our foot down on the gas pedal and grow. Growth is our only initiative, and that's what they want to see. When you go public, you need to also focus on costs. That growth comes at a cost, and shareholders want to know, if you are efficiently spending to achieve that growth. And so you've got to, your CEO, CFO, start to focus on the bottom line, not just growth anymore. And that is a shift that is not always made explicit, and some people forget that for a few quarters. So, as a finance pro in a public company, you've got to have the ability to drill down into the numbers, and especially management by exception. What is different than the budget and the forecast and the plan? Slice and dice and find out what is driving those exceptions. And one of the other things you need to do is start holding departments more accountable. So if you've got a system that allows you to dig into separate budgets, separate expenses for each department, or your different channels, lines of business, and different teams, then the whole organization becomes accountable. It's not just one roll-up at the high finance level. You can hold the IT department responsible. You can hold the marketing department accountable, not just from finance team, but they've got their own accountability as well. So last point here, Rob. So what do you do when it comes to accountability, or how do you drill down when it comes to investigating exceptions and expenses and budgets that maybe you weren't expecting?
Yeah, sure. I mean, I think, to be honest, Intacct has really helped us a lot here, because with our previous systems, we weren't able to break stuff out necessarily in the dimensions that we would like to. And we've organized our business around departments, which is pretty straightforward, but it also, we both do our forecasting and kind of our drill down on expenses to those budgets, and each of those departments is assigned a department leader, and they're the responsible party. They're the one that you go to when something is different than it should be, or either in either a good or a bad way, like just trying to get an understanding of what's going on. If you assign accountability and then you have the data to back it up, it makes that much easier to figure out where you need to course correct.
Thanks, Rob. I think we have come to the end of our 8 points, so I want to remind everybody of what we just spent, probably 45 minutes going through these 8 points. And in summary, the bottom line is that many things about your finance team, your finance processes are going to change both before and after an IPO. And you need to be prepared to manage this complexity of going public. Rob talked a lot about complexity. And frankly, Intacct is one of those ways that you can help with manage that complexity. So now's a good time for a couple more questions. While you're typing those in, you have questions for me, questions for Rob, questions about going public, questions for even Rihanna on SIIA. You can get a white paper on this topic. We have it at Intacct.com under our resources section. It's a written out version of a lot of the topics we covered, a little more depth, something you can read on your own, read on your spare time. We encourage you to go and download that. It's a free white paper. And a little bit more about Intacct. So again, we're cloud-based finance and accounting solution. We help with visibility. We help with automation. We help you go public, and we work with a number of companies that have gone public on Intacct. We work with a lot of smaller companies that are owned by larger public companies, so we are very familiar with the rigors of reporting and compliance as a public company. And I should have Opower and the largest logo here and up top as a way to highlight Rob and the great things that he's doing at his company. But I've gone in alphabetical order here, so you can find Opower here among many other companies that we work with. And lastly, before I answer a couple of these questions here, if you do want to learn more about Intacct, and this is kind of the end of my commercial here, I thank you for sitting through the 30-second commercial, but we do offer a free trial, and we do a number of webinars, product tours, demos, where you can learn more about what we do and how we can help your business. So go ahead and find us at intacct.com or on social media. Give us a call, shoot us an email directly. We'd love to continue the conversation with you. So I will say thank you on behalf of Intacct, and thank you, Rob, for adding your expertise and guidance and sharing your experiences on this. And I think what I'd like to do, Ren, if it's okay, I'll answer some of these questions that people have been asking. I'll read a few of these out loud.
Sounds good.
All right. So one of the questions came up earlier: can we import or transfer over data from our existing system, and should we? So Rob, I'll ask you to comment on this one. You talked about the 5-year financials, and you went to Intacct about 3 years before going public. So what did you do with all your old data, and how do you manage that?
Mm-hmm. So we kind of took maybe a hybrid approach, which is we imported data, but we imported a lot of the balance data. So if we wanted to run comparative reports, see the P&L prior year versus current year, you could see the balances and get a high-level understanding of what was going into those accounts. But we didn't pull over the transactions. So for the older stuff, I think for the ones that we knew the quarters and we might have to do some investigation on, we pulled over the transactions. Before that, we only pulled over the balances. So we had the information there from a high level, allowing us to do some comparables, but not necessarily all the data, because we knew that we were going to have to look at it very often.
Okay, I think that's pretty typically what we see as well. We do a lot of balances and high levels coming over monthly or quarterly, and certainly don't have to carry over every single transaction. But it depends on what you really want to see. We have a number of tools that help you within Intacct automatically roll forward information from QuickBooks, for example. We do a lot of businesses that are graduating from QuickBooks into a more robust system as they grow. So it's pretty common to see that. You want to move over the data, but probably not every single historical transaction. All right, let's see. So in addition to being able to report better as a public company, how can a new financial system help with compliance? So I think we touched on that a little. Rob, do you have any specific examples, or even control failures or horror stories on compliance, and maybe some ways that things have changed for the better?
Sure. So no horror stories, fortunately. But what I do have, I think part of the compliance issue is just visibility and trackability, and it's both being able to lock either particular books and particular items within the G&L, so that you're not just having one on-off switch, which a lot of less complex systems have. But it's also the traceability of a transaction. So who originally made the transaction, when did they make it, what changed between the first time the transaction was made and the second time the transaction was made, and was the support updated to follow it. So I think that's something to keep in mind, is if you're going to get audited on it, if you're going to have somebody come in and look at the SOX, like you have to have documentation of the process, and it's always better to have that in a system and recorded systematically rather than trying to rely on some kind of manual controls or a signature check off, because one, it's difficult to investigate to see if it's working properly, and two, it's just, as humans we're fallible, and if the system forces us to do something rather than relying on us to do everything perfectly every time, that's always a little better.
Thanks, Rob. I think that's a very, very practical yet philosophical way of answering that question. And if there are any more questions, got a few more minutes to chat them in. But otherwise, I'll start going into wrap-up mode here. Rob, thanks once again. Thank you, everyone out there on the webinar, for attending. I hope you got a lot out of this and now feel a little more educated and prepared as you think about going public as well. Rihanna, I'm going to hand it back to you if you have any final comments. Otherwise, I'm ready to sign off here. I appreciate everyone's time today.
Thanks, Mark. Thanks, Rob. Appreciate your time, both of your time today. And again, thank you to everybody on the webinar. And I encourage you to take a look at that white paper that Mark showcased you. And I'll remind everyone that you will get a copy of this webinar, so you'll have that link easily available to you. So with that, again, I hope everybody has a wonderful rest of their week. And again, Mark and Rob, thank you.
Thanks, everybody.